I just received this query from one of our student. What is viability gap funding? Before getting into some kind of technical definition, let's look at this picture. Let's say government is coming out with a project for metro. Okay, excuse me, just consider this as metro. Okay, so government is coming out with a project for a metro, and let's say this project is going to cost somewhere like 1000 crore for a short distance. Okay, now this 1000 crore have to be funded. So the company which is taking up this project, let's say they have managed to bring in 500 crore through equity. Then they went and approached bank for a loan. Bank is ready to give a loan up to 300 crore based on viability, because they have to look at the repayment capacity. So based on this project, based on the passengers ticket, banks have come to the conclusion that this metro project is eligible only for a loan of 300 crore. So now there is a shortage. There is a shortage of 200 crore. So how this shortage can be funded? The one option in front of the company is to go back to the bank, ask for remaining 200 crore loan. But bank has already taken a stand that this project has viability to service only 300 crore loan. It means whatever the profit they make, that is adequate enough to pay only 300 crore loan. So if at all more loan have to be accommodated, then the train fares, the metro train ticket, everything have to be increased. Okay, and that will become dearer or costly for the passengers, and the project may even become unviable. So that option is not advisable. So there is a shortage of 200 crore, but this metro project is very much essential. It is a social infrastructure, and this project is economically justified because it is going to help out lot many commuters. So it is economically justified, but now it is facing shortage of funds due to this viability factor. Okay, because bank said viability is limited only to 300 crore. So who will fund this 200 crore? That's where a government steps in. Government steps in and they fund these kind of socio-economical or socio-infrastructure projects through their viability gap funding scheme. So here government will give this 200 crore as a grant and not as a loan. So when it comes as a grant, what is the special factor? It need not be repaid. So there is no repayment. It means there is no stress on this fund. Correct? So this viability gap funding is basically a grant, and this is given to support economically justified project which lacks financial stability. Here the project can tolerate only 300 crore loan. If more loan is added, then that will affect the financial stability. So more loan is not possible. That's why government is going to come out with grant. Even private sector companies are eligible for this viability gap funding, but they got to be selected on the basis of open competitive bidding only, and there are various other parameters which we have to be up to date. Even some 2 days back, that is, I'm recording this video on 10th December 2021, even some 2 days back there were some latest developments related to viability gap funding.
Thank you for watching this video. Hope you liked it. If you wish to learn more on this topic, do check our comprehensive online course. I have given the link in the description below. If you like this video lecture, do not forget to click on that like, share and subscribe button with bell icon.